everyone, and welcome back to Forex Scope. I'm excited to dive deep into the gold market with you today, focusing on the very short term, 15-minute and 1-minute timeframes. If you're looking for actionable insights, potential trading signals, and a glimpse into where gold might be headed next, you're in the right place. Before we get started with today's analysis, if you're new here, please consider hitting that subscribe button and turning on notifications so you don't miss out on any of our daily Forex updates. Let's jump right in. The support zone is identified by the price action occurring between the timestamps 176-252-5800 and 176-252-6700, with a high of 3,995.678 and a low of 3,984.426. This area demonstrates significant buying pressure as the price bounced back from its lows around 3,984.426. Observing the candles within this timeframe, we see a strong bearish candle followed by a sharp reversal upwards, indicating that this price level acted as a strong floor. The price repeatedly tested the vicinity of 3,990.549 and found strong rejection of further downside movement, suggesting accumulation and a potential reversal. The significant volume accompanying the bullish move after the low at 3,984.426 further validates this support. The numerous attempts to push the price lower were met with aggressive buying, establishing this as a robust demand zone. The clear bounce from this region suggests that market participants viewed this price level as undervalued, leading to increased buying interest and a firm support. The resistance zone is defined by the price action observed between the timestamps 176-250-2400 and 176-250-3300, with a high of 4,010.259 and a low of 4,003.961. This area shows a clear ceiling where selling pressure becomes dominant, pushing the price back down after it reached these levels. The candlestick patterns within this range indicate a struggle for buyers to maintain upward momentum, culminating in bearish reversals. The price repeatedly attempted to break above 4,010.259 but was consistently rejected, forming a significant barrier. This suggests that sellers were actively defending this price level, absorbing buying pressure and causing a pullback. The presence of relatively high trading volume during these bearish movements reinforces the strength of this resistance. The inability of the price to sustain itself above 4,010.259 signifies a zone where supply overwhelms demand, acting as a formidable resistance. The clear downside moves from the highs around 4,010.259 illustrate the selling pressure at play. This support zone is identified based on multiple price touches and a period of consolidation around the 4,002.758 to 4,003.243 level. Observing the price action within this timeframe, we see several candles interacting with this area. For instance, the candle at 176-254-4520 had a low of 4,002.899 and the candle at 176-254-4580 had a low of 4,002.758, indicating that prices struggled to break below this lower bound. Prior to this, the price action around 176-254-4520 showed a closing price of 4,003.243 and a low of 4,002.899, and the preceding candle at 176-254-4460 closed at 4,002.429 with a low of 4,001.721, further suggesting a prior area of buying interest. The subsequent candle at 176-254-4580 opened at 4,003.268 and closed at 4,003.837, demonstrating a bounce from this support level. The high price within this specific range from 176-254-4520 to 176-254-4580 was 4,004.039, and the low was 4,002.758, encompassing a key area where buyers stepped in to prevent further price declines, exhibiting a clear price action support. The density of touches and the brief consolidation phase point to a significant level where demand outpaced supply. This resistance zone is formed by a cluster of price action indicating a ceiling that the market found difficult to overcome. Between the timestamps 176-254-3500 and 176-254-3620, we observe several candles testing and failing to break above this critical level. Specifically, the candle at 176-254-3500 opened at 4,006.792 and closed at 4,006.862, with a high of 4,007.583, showing an initial rejection. The subsequent candle at 176-254-3560 opened at 4,006.844 and closed at 4,007.224, with a high of 4,007.312, reinforcing the difficulty in pushing higher. Following this, the candle at 176-254-3620 opened at 4,007.216 and closed at 4,007.221, with a high of 4,007.396, indicating continued struggles to break through. The low price within this period, from 176,254,3500 to 176,254,3620, was 4006.239. This area, roughly between 4006.792 and 4007.224, shows multiple price points failing to sustain higher levels, characterized by bearish price action and an inability for buyers to establish dominance, marking it as a significant resistance. The repeated testing of this price range without a clear breakout suggests strong selling pressure and a significant barrier to upward price movement. The initial price point of 4001.422 suggests a period of consolidation following recent price action. The Fibonacci sequence, with 4000.991 being the lower and 4005.338 being the higher, indicates that the current price is within a significant retracement or consolidation zone. Given the slight upward bias in the Fibonacci range and the recent attempts to move higher, we anticipate a cautious upward movement. The first predicted price point of 4002.5 represents a minor resistance test. Should this be overcome, the price could advance towards 4001.8, potentially retesting the lower Fibonacci levels as support. However, the prevailing sentiment leans towards a gradual ascent, pushing towards 4003.5, a level that aligns with the middle Fibonacci range and has shown some historical significance. A brief pullback to 4002.9 is possible before a more decisive move towards 4004.2, nearing the upper Fibonacci boundary. This forecast considers the interplay of price action, the Fibonacci levels, and the recent volatility, aiming for a plausible zigzag pattern that reflects the market's inherent indecision and potential for both upward and downward fluctuations within this complex price structure. The tick volume data, though not explicitly detailed here, would be further analyzed to confirm the strength of these potential moves. The Bollinger Band's current position also suggests room for price expansion in either direction, but the overall context points to a cautious bullish bias in the immediate future.